So when Amazon wanted to open a second headquarters in the United States, many states and regions rushed to offer various incentive programs to attract Amazon. Singapore is no different. The government offers incentives for foreign companies who wish to set up shop here. What incentives are available? Well, let's have a chat over coffee. So, what are the incentives that the government offers for companies that want to regionalize or base their headquarters in Singapore? Let's have a look at some of them. The first is the Pioneer Certificate Incentive and the Development and Expansion Incentive, the PCI and the DEI. These are offered by the Economic Development Board of Singapore. In order to qualify for these incentives, companies have to show that they are prepared to make significant investments in contribution to the economy or an advancement of capabilities towards globally leading industries. The benefit of having these incentives is that the company has a corporate tax exemption in the case of the PCI, or concessionary tax rate of 5% or 10% in the case of the DEI on income derived from qualifying activities for a period of 5 years. A second incentive that the EDB offers is the Intellectual Property Development Incentive. This is still subject to the enactment of legislation. To be eligible, companies need to demonstrate that they are prepared to make significant investments in research and development activities leading to the use and commercialization of IP rights. The benefits of these incentives are a reduced corporate tax rate of either 5% or 10% on a percentage of qualifying IP income for an initial period of 10 years. The third incentive that I would like to talk about is the Enhanced Tier Fund Tax Scheme, or ETF scheme. And the relevant agency for this is the Monetary Authority of Singapore, or MAS. To be eligible, funds which are either offshore as well as Singapore located, regardless of their legal form, must demonstrate that firstly, they have a minimum of 200,000 Singapore dollars of business spending. Secondly, a fund size of at least 50 million Singapore dollars at the time of application. And third, having a Singapore-based fund manager that employs at least 3 investment professionals in Singapore. The benefit of the ETF is that companies are exempt from tax on income and gains from designated investments. Finally, there is the VCC grant scheme. In an earlier episode, we talked about the variable capital company structure, which was just introduced earlier this year, tailored specifically for fund management companies. Now, the VCC grant scheme is granted by MAS, and to be eligible, you have to be a licensed or registered entity who wishes to set up a VCC in Singapore. What are the benefits? The scheme offers to defray costs involved in incorporating a VCC by co-funding up to 70% of eligible expenses paid to Singapore-based service providers, capped at 150,000 Singapore dollars for each application. Each fund manager can apply for a maximum of 3 VCCs under this incentive. And that's all we have time for today. I've only given a brief overview, and if you'd like to take the conversation further, please feel free to reach out.